Hi everybody, this is Lara with your end of the week video for the US oil cash market for the trading week ending Friday 6th of March, and I'm recording this week from Panama City. Oil is continuing to move lower as I was expecting last week, and the next target for an interruption to a downward trend, which is in place at both daily and weekly time frames, is about 28.24. Elliott wave analysis first, classic analysis last. I still will have two wave counts, but the alternate bullish wave count has reduced in probability. We'll get to that next. This is still my main bearish Elliott wave count for oil, and it remains very bearish. This Elliott wave count sees a double zigzag unfolding for a super cycle degree second wave. The first zigzag is complete here. It's labelled cycle wave W, and it subdivides 5, 3, 5 as a zigzag must. The double is joined by a 3 in the opposite direction, which is labelled cycle wave X. It too subdivides as a zigzag, and that's the most common corrective structure for an X wave to be. It subdivides 5, 3, 5, and the second zigzag in the double will be labelled cycle wave Y. It too should subdivide as a zigzag 5, 3, 5. A second zigzag in a double has a purpose to deepen the correction when the first zigzag does not move price deep enough. For cycle wave Y to achieve that purpose, it should be expected to move reasonably below the end of cycle W at 26.06. Let's take a look at the weekly chart now for this main bearish wave count for oil, where this high labelled cycle X here is this point up here. Now we're looking at the structure of cycle wave Y subdividing as a zigzag 5, 3, 5. Primary wave C is expected to subdivide as a 5 wave impulse, most likely. It could also be an ending diagonal. If in future weeks or months overlapping suggests a diagonal, then I will chart and publish that. But it is less likely than an impulse, so if we can expect the most common Elliott wave structure will unfold, or should unfold, then we should have, in terms of probability, we should have the most likely wave count. Primary C needs to subdivide as a 5 wave structure, and so far intermediate 1 and 2 may be complete. Within intermediate wave 3, no second wave correction may move beyond its start above the midterm invalidation point. Let's take a look at how primary C is beginning at the daily chart level. We'll look from this high here, the end of this double combination for primary wave B. This high is this point here. Now primary C beginning with an impulse for intermediate 1, a double zigzag for intermediate 2, and an impulse. If primary C is an impulse, then the third wave within it for intermediate 3 may only subdivide as an impulse. I've calculated a target for intermediate 3 for it to reach a common Fibonacci ratio to intermediate 1 of 1.618. If this target's wrong, it may not be quite low enough though. Oil does tend to have extended third waves, and sometimes, or fairly often, they are longer than 1.618, the length of the first wave. However, that looks quite reasonable in this instance because intermediate 2 is relatively shallow. Intermediate 3 may only subdivide as an impulse, and within it minor waves 1 and 2 may be complete. This strong downward end to downward session for Friday's session does look like the start of a third wave. I would expect it to have support from volume, even to the downside. I would expect it to exhibit an increase in momentum and range. In short, it should be quite a strong movement, a third wave within a third wave. There may be further strength to the downside to develop, particularly as we get into minor 5 of intermediate 3. Look out for stronger downward movement in coming weeks. Within minor 3, no second wave correction may move beyond its start above the short-term invalidation point. At the monthly chart level, this is now an alternate bullish wave count. My previous wave count, which was bullish for oil, saw cycle wave 2 over here. Now I'm going to consider the possibility it could be continuing lower as a double zigzag. This wave count, compared to my first monthly chart, moves everything here up 1 degree, and instead of supercycle 2 continuing even further, what if it was over here as a single zigzag? If that's correct, then oil should have begun a new bull market at this low down here, and this first move up here must be seen as a 5-wave structure, and I'm going to label it cycle 1. There's a wee problem in here. It's rather difficult to see this as a 5. It's forced within the middle of the 3rd wave, which may only subdivide as an impulse. The problem is the 4th wave within here has to be really brief. It can be seen as a 5-wave structure, so let's consider all possibilities. If a bull market has begun here for oil, then this would be a 1st wave. A 2nd wave correction may be continuing lower, and it may not move beyond the start of the 1st wave below this final invalidation point for the bullish wave count. Let's take a look at this at the weekly chart level, where the high for cycle 1 is this point here. Now I'm considering cycle 2 could be continuing lower as a double zigzag. The first zigzag in the double is labelled primary wave W. The double is joined by a 3 in the opposite direction labelled X, and primary Y may have begun here, 5, 3, 5. We have to see this as a 5-wave structure, and that's possible. It doesn't have as good a fit as seeing it as a 3 though. The main count does see it as a 3. For this wave count, intermediate C could be over here. This looks a little bit forced here. 1, 2, 3, 4, 5. I mean, that could fit. It just looks a bit forced. There are more than one way to see this as a 5-wave structure though. We could also see it 1, 2, 3, 4, 5, which may make a little bit more sense because commodities tend to have more brief 4th waves and more time-consuming 2nd waves. Either way, no matter how I label this possible impulse for this count for intermediate C, it's certainly possible it could continue lower. The final 5th wave may not be over. Let's look at the daily chart, and I'm going to label this slightly differently for you on the daily chart. 1, 2, 3, 4, 5, a brief 4th wave, a more time-consuming 2nd wave. Minor 5 could certainly continue lower. It may not be over at Friday's low, and so the invalidation point remains at 26.06. A new low by any amount at any time frame below that point would see this bullish wave count firmly and finally discarded. At that stage I would have enough confidence in my bearish wave count to calculate those very low targets for you. I'm not going to do that yet because that may attract a bit too much derision. It's a very bearish wave count. Let's look at some classic analysis now at the monthly chart level for oil. The month of March obviously has only just begun, so I can't draw any conclusions about this candlestick nor its volume because we've only had 1 week of this month. The previous 2 months were pretty strong. They had increased range and volume was actively pushing price lower. Within this movement here, it's these downward movements here, here and here that have strongest range and strongest volume, suggesting a downward breakout from this consolidation. That's what we got, and now we've got a break below this low. That's significant. That's a bearish signal. At the weekly chart level, here's the break below support, previous support back down here, price has broken below, on balance volume has broken below a support line, adding some confidence to the breakout. Volume is pushing price lower. This weekly candlestick closes with price near the lows for the week and a bearish long upper wick that fairly strongly suggests more downward movement next week. At the weekly chart level, ADX is increasing. The negative DX line is above the positive. ADX is suggesting telling us there is a downward trend. Price is obviously in a downward trend. The trend could be still in its relatively early stages. This is the strongest signal ADX can give. When the black ADX line rises from low levels and comes up from below both directional lines, and then it reaches 15 and above, it tells us there is a trend in place, and the negative DX line is above the positive. In this instance, the trend is down. ATR is increasing again as price falls. Each time price has been falling, ATR has been increasing. There is strength in downward movement. There was weakness in upward movement, suggesting a downward breakout. That's what we got. At the daily chart level, again, prices closed really close to the lows for the session. A strong volume spike suggests a selling climax, but because prices closing so close to lows for the session, I would expect more downward movement when markets open on Monday. I will expect that because of where prices closed and because a selling climax is not always a single day event. It can continue for a little bit longer. When this particular market has a strong trend, particularly a downward trend, RSI and stochastics can remain oversold. They can reach deeply oversold and remain there for quite reasonable periods of time. Only when RSI has reached deeply oversold and then exhibits bullish divergence with price between lows is it warning of a more sustainable low in place. We do not have that yet. There is plenty of room for price to fall here. At the daily chart level, ADX also can reach fairly extreme and remain there for a reasonable period of time. At this stage, ADX is not extreme. It's not above 45 and it's not above both directional lines. There is plenty of room for this trend to continue. ATR increasing supports the trend. That's all from me with your oil analysis this week. I hope all our members are having an absolutely fabulous weekend.